Hello and welcome to Business Today Television. I am Siddharth Zarabi and you're watching our daily show Easynomics, the show where we touch upon the main economic news of the day. And joining me on the show today, Navneet Damani, Senior Vice President for Commodity Research at Motilal Oswal Financial Services. Navneet, welcome to the show. The subject that we have is the recent turbulence in the currency markets and the big question that most investors have in their mind, which way is the rupee going to head? And why is this subject important today? Because like we have seen over the recent past, there's been a bit of volatility when it comes to the Indian currency. It's not just the levels. For several weeks earlier this year, we were guessing when will it breach 80. And then when it touched 83, there were other questions. But today at 3:30 p.m., it had come to 81.29 paisa to the US dollar. So Navneet, what is really going on with the rupee? There was a bit of skittishness because investors got concerned today with reports that a missile had fallen in a NATO nation of Poland, and there were fears that this could mean escalation in the war. But Joe Biden, the US president, has said that perhaps was not a Russian missile. It may have been a Ukrainian missile that went awry. So that seems to have soothed nerves. But beyond all of that short-term news, what's really the outlook on the rupee?
Yeah, good evening. And let's take two steps back before we get into what has happened today. We were consolidating between 70 and 74 half for a very long period of time. And to be precise, it was 105 weeks of consolidation where the prices were between those rates. Now, what has happened? India was trying to control forex reserve. No, that's not the case. It was a natural outflow from our nation, and even that did not help the currency depreciate much. So our country definitely shows that there was a lot of resilience and there was a lot of positivity on the domestic front, which got the rupee and was pretty range bound. But what happened later on was that outflow started to build some pressure and the dollar started to depreciate very fast. And by very fast, I mean from 101 level to 114 levels in a matter of 6 to 8 months, which led to the fall in the rupee. So largely, our depreciation from say 75 to 83 was on the back of falling or strengthening of the US dollar as against many other nations or major currencies. However, we did not depreciate to the same tune like many other currencies. Now, having said that, I feel that the rally was a little overstretched and around 83, 83 half was where you see a lot of resistance or a lot of tiredness coming into the entire rally. And it started to lose some nerves and came down back towards 80, 80 and a half levels. Now, my stance for the medium term perspective still remains of a depreciating INR. Now, let us talk about what has happened today. Some bit of chills came in the morning where a missile hit and it was blamed on Russia, but clarification did lead to some news that it is primarily from Ukraine and not from Russia, which kind of soothed some nerves. Having said that, I believe that 81 half, 81.70 is another level where, from a medium term perspective, you would like to have some cap on the gains. But on the downside, also, we don't expect prices to be appreciating below 80 or 80.20 levels. So, this could be a broad range for the currency for the next couple of weeks or so.
Okay, uh, the broad range that you said for the next couple of weeks, if you were to sort of go beyond that, what are the medium term triggers that you are seeing for the rupee? One of the things that we've been talking about in the recent past is a reversal in inflows into the markets. We saw a significant period of outflows, but there seems to be element of inflows that perhaps could strengthen. Is that also being factored in?
That's largely getting factored in. But having said that, I see that once there was a lot of outflow, the rupee did not depreciate as much. So inflows is also not likely to bring in such a big amount, and it's not likely to impact the rupee much because the kind of volatility we are seeing, it is running into billions of dollars, and we don't see that kind of inflow coming in day out. So I think that is all going to get factored. Is eventually maybe some days when there is huge inflow coming in, like the one we had from over the last 2 3 days, that kind of inflow could get some positive bias. But largely, I don't see it impacting much of the market. What are the factors which could impact the market in the near term? One is a strengthening dollar, primary positive news coming in from the US, and we are already starting to see that. Starting with the inflation numbers, which were better than expectation, housing sales number have started to improve, and of course, after 2-3 consecutive quarters of negative growth, if the growth this time is better than expectation, then it is definitely going to add some positivity, and the dollar could start to reverse once again, which could lead to some negative bias. Another factor is opening up of China from the lockdowns, and we have seen initial signs of that happening. Over the next couple of weeks, or probably a month's time frame, we'll have more clarity as to what's the stance of China as far as COVID is concerned. If that starts to loosen up, the yen, the yuan, which has been depreciating for some time now, could start to gain some strength, which could have some rupee under pressure once again. And domestic numbers are not really very robust, and even if they are robust, other nations are doing better than us in terms of numbers, like primarily from US. So that could be one factor which the market is looking at the moment.
Navneet, how much will the factor of a lower sort of import bill in dollar terms play out as far as the rupee is concerned? Because I saw the Indian basket of crude, it was down well over $3.50, and the overall outlook seems to be a bit benign.
Well, to be very fair, we are not very positive that crude oil would come down very significantly from here. And what you're saying, as far as the Indian basket is concerned, is probably from a 1 month perspective. But from a 1 quarter perspective, if you see the numbers, they are not very exciting, and they are pretty much at par with what they were a quarter back. Now, having said that, I believe that crude oil prices above $90 or probably about $95 is here to stay. And as we approach the winter season, I will not be surprised if we add another 5%, 7% gains from here also. So these
Okay.
numbers are likely to go for a toss, and that could be a pressurizing factor for the rupee.
Okay, on the screen, viewers, and I'll request my producers to bring that chart back up, which was basically a point that Navneet just made a little while ago, which is the forecast for support and resistance for the Indian currency. The state-owned bank support at 81.5, resistance at 81, and if you see broadly within that same range, the upper end being 81.5 as far as most of the people who have been polled seem to suggest. So that giving you a sort of sense about the rupee. Navneet, let's come back into the point where we discuss what is likely to happen as the year winds down in the Western world. The Western world calendar year post 15 December, everything practically gets squared off. What do you expect as far as overall flows are concerned into the Indian markets? Do you see that being significant or continuing with the recent trend?
Well, I think recent trend is likely to continue, and significant flows at 18,400, 18,500 for the Nifty would be a little cautious. Of course, they're coming back in action. They kind of missed the rally. So FII, FPI, they missed the rally to a large extent, but flows will be questionable, and how strong and how quick they will be is something which we'll have to wait and watch. I think it's too premature to say that, judging it from a last 15 days data, that flows are going to be very robust. So I will take some time before we frame up that it's going to be a robust inflow and would significantly impact the rupee.
Okay, we've done the business part of the conversation. I want to take one last question with you, because this was a question that as I headed into the BTTV studio, that I was asked by a colleague, and he has a child studying abroad. We know how the rupee and its volatility impacts various constituents in the economy. For people like them, what should they be looking towards till March? Forking out more rupees to send the monthly fees and support to their children who are studying abroad?
Well, that's most likely going to be the case, and we expect that whatever we've seen till now is going to be retested, or probably even weaker rupee from here could be possible. I will not be surprised if we break 83 half this time and inch toward 84, 84 half also. and that comes on the back of stronger dollar. We don't expect dollar index to say fall very sharply from here, and any reversal from here, any positive news from the US could likely to have upper hand on the rupee, and that could lead to sharp depreciation. So probably my sense for the next couple of quarters would be 83 half 84 levels in the months to come.
Okay, viewers, so those are numbers which are significant depending on which side. Today exporters booked profits, but if you're an importer, it bites you the other way, and that's the beauty of the rupee. If you have it, it's good, but if you have to transact it with the dollar, depends on where you are standing, which side of the line you are on. It gives you that impact proportionately. Thank you very much, Namneet, for your time with us. With that, it's a wrap on this episode of Easynomics. We'll be back with more. Do stay tuned in to Business Today Television.